Hello everybody, we're back again for another installment of the Romeo CRT 2023 review. This time I'm going to be reviewing trade number 5, a Euro USD short on February 15th of 2023. The purpose of this video series is to learn more about CRT and turtle soup and quote, keep the engine running over the weekends for me as part of my trading process. I think studying your own trades is amazing because you can learn so much about yourself, but if you're learning a system, and I admit I'm still learning lots and lots of new things about the CRT turtle soup entry system, then you gotta just stay current with it and also review. I consider this compilation of trades in 2023 to be the gold standard of these CRT trades, so why not just start there? So looking at this slide, you can see you've got the before on the left and the after on the right. There was already a turtle soup entry using the round, the key level 1.08 in the euro. And so that gives you that initial bearish entry in the wick of that 2-hour candle. And then we're basically proceeding lower to the draw on liquidity. So the trade he's outlined here on February 15th is a continuation trade. You could also call this the kiss of death, right? A kiss of death trade, because this is the final turtle soup before the before the draw on liquidity is reached, before target 2 is reached. If you, I'm going to go into FX replay, but just to note, this is really well laid out. He's got his invalidation level, like his stop loss, 1.07339, and then obviously the draw on liquidity with the eye emoji. The other feature that I'd like to point out about this chart is he's got that gray rectangle, and he's labeled that bearish order block. I don't know. I actually think that might be more of a breaker in the way that I've been cataloging things. So let's go into FX replay and let's look a little bit more in detail and at the lower time frames. So I've set this chart up pretty much the same way that he's had it. I'm on the 2-hour chart in the euro on February 15th, and I've started this off at the exact moment that this trade, that you could basically be pulling the trigger on this trade. I'm not actually going to sim trade this, just because we've all seen the after chart. There's nothing super special about the risk management here, so no need to even pull the trigger out of the sim trade. One thing to note is, in addition to this order block or breaker, there's this key level as well. So kind of thinking in terms of like a harmonic pattern, you might have, it might be very efficient for price to deliver back into that low. So looking at the typical turtle soup setup and like thinking about the number of candles that need to elapse, if this candle here, that this swing low that rests within this 2-hour bullish FVG, if this is a key level and then this gets broken and decisively closed below, then you can count. That's what I always like to do with these turtle soups. I've been doing it actually in my live trading. It's been super helpful to like kind of ensure that I'm being patient. So in other words, like if this is candle number 1, which is the candle that decisively broke and closed below the key level, then this is essentially what kicks off the accumulation. you could think of this as in terms of, from a market making perspective, price has gotten too bearish. It has gotten essentially oversold with respect to the Euro USD pair. And so if you count, and I always like to count, I think the sweet spot is between 7 and 12 candles. And I've actually had a lot of recurring, signals, and even looking back through these past trades, I've had them occurring on the 8th or the 9th candle. That seems to be a sweet spot, or essentially like the mode of the distribution of how long these range into, range being accumulation, into manipulation being bearish or bullish turtle soup before the final level. So you can see that it's the 8th candle here on the 2-hour chart that gets manipulated, and there's a reason. So obviously a lot of traders love to use the 1 hour. A lot of traders love to use the 4 hour for analysis, but there's a reason why you picked the 2 hour, and I think that it's just to highlight not a pattern, but essentially a logic, a setup before the setup. So what you have here is you have I would call it an unrequited low, or an area of liquidity that has yet to be tapped into on the sell side, and you have the market becoming oversold, and this is what creates the kiss of death turtle soup entry. Is the market has ranged or accumulated for the correct number of candles, I would say between 7 and 12, and then we tap into what is usually the 50% fib, and so we don't really get it on this trade, but the idea is we're in some sort of premium, right? That's another good thing to look for, is we're in some sort of premium. So in other words, from this swing high to this swing low on the 2-hour time frame, right, we're in premium. That's a good thing to double check. Now, usually if the that'll basically show you if you're being induced or not, right? So obviously inducement could occur if the price hasn't sufficiently reached premium or discount relative to the retracement and and relative to the internal liquidity. So the idea of like the difference between like inducement and an actual trade entry that forms the swing high or low that you're looking for is an idea of, has sufficient internal liquidity been taken out. You can also view this in terms of fair value gaps, which is, I think, a really healthy thing to do, and it's a good thing to always double check. Are there consecutive fair value gaps preceding, not proceeding, but preceding, so in other words, before your accumulation phase? So the idea of trend into range, and we're looking at the nuances of the range, and now we can back up further in time and look at nuances in the trend. There's a nice bearish fair value gap here. It's displaced a lot of price, and then there's a nice bearish fair value gap here. I'm just going to color these a little different just to make sure that they're not cluttering the. You don't have, so a lot of objects that are the same color adds a lot of clutter here. So I'm just going to make it a lot more opaque and maybe shade it a little light blue here. So in other words, with these two fair value gaps, the inclination from an internal liquidity perspective is to fill the first one and leave the second one unfilled, or in this case, it looks like we're just trying to, that's interesting. So we'll see. I think on the lower time frames, we'll see how the oops, I drew that blue wrong. There we go. And I apologize for all the overlapping rectangles, but it's this idea of like a breaker, or I think he has it low on the original chart as an order block, but tomato tomato, and these two fair value gaps and the interaction between that that confluence there. So I'm gonna go. So we're on the 2-hour chart. So I'm actually gonna go to the 5-minute chart here, and we'll have a look. So I think actually, you know what? What is the hourly show? I'm trying to see where he may have got that. What he has labeled as an order block from. Yeah. Okay. Here we go. So this is where I found it. Was on the 15-minute chart. This is like the closest I could find. So this is a swing low. It's a fat down close candle. And for any short-term bull traders that were looking to get long the euro and getting induced essentially, what this shows is it's basically that the reason that's why I think it's a breaker, because it's a down close candle within a bearish trend that was essentially a fake out, and we're going to trade back up into that, potentially to allow those traders to mitigate their losses, but also to potentially we already talked about clearing the internal inefficiency. So, okay. Let's just play this trade out through, and we're just gonna see it through to the end, and I want to look for short-term entry signals here on the 5-minute chart. And that's going to show us, that's going to allow us to like almost as if we're reviewing a flashcard, just to say like, okay, here's a known turtle soup entry. We've explored all the nuances. Now let's drill down and let's look at execution details. So I'm just playing it out over the 5-minute chart now. Okay. So what I've seen here, and I'm going to fade this into the background a little bit. And then I'm going to draw the darker model on the 5-minute chart here. I'm going to make this darker. Okay, thank you for being patient. So I actually see a chance to get aggressive, basically trading in the wick. I see a chance to trade in the wick of this turtle soup here. Why am I trading in the wick? Well, in the 2-hour time frame, which was the original analysis time frame, it's going to look like a wick has formed, and then obviously the invalidation. So we're operating at a 2.14 reward to risk ratio, 2.14 to 1, or a 1 to 2.4 risk to reward ratio. And the reason why this is a really great kind of what I would call a classic model number 1 is we have a fat up close candle, swing high. It's followed by a fair value gap before the retest of that candle body. We could like wick higher and get into some drawdown here, but that is a pretty good entry. And just like looking back at his PowerPoint really quickly, oh yeah, so he actually has a better entry than that, and I'll show you where he enters. So he's got his entry at 1.07168, which I'm going to switch back to FX replay here. So his entry is actually probably a little better risk to reward. So that's actually that's some good data there, that he doesn't actually take the bite that I took. So I was like, I'm obviously eager to get short, but we'll leave the order block there. It's only invalidated if there are 2 closes above. Okay, so this has been invalidated. And now we're going to look for another short-term, lower time frame entry model to form. Nice. So balanced price range there. You could probably get short on a retest of that candle body. Wow. It's really, on the lower time frames, it gets noisy, doesn't it? Yeah, so we never really get the retest. So that means that he's getting very, very aggressively short there. I do have it right. I just double checked. The entry that he's diagrammed on the chart was 1.0716. So maybe he's thinking a turtle soup of this high on the lower time frames, and yeah, that's just a very, let's look at the 1 minute. Interesting. So I'm not really seeing like a retest of that level, but then again, he may have been like on TradingView in hindsight and just been doing analysis and execution on MT4 or something like that, and so he might have he might be giving himself a little bit more, but I don't know. Actually, he might be using a lower time frame entry model that he hasn't actually revealed yet. I'm gonna let it play out and then I'll break it all down. So nice. It's just so efficient. It follows that same. That's the other thing that I've been doing with every single one of these trades, which has just been so mentally helpful, which has been like, if candle number 1, and we're on the 2-hour chart, is this 5 o'clock open here, and then to the time it takes to essentially manipulate, I always like to kind of what would be like the best entry possible. Well, that's 268 bars. And then how long does it take to distribute? And this one's a good ratio, right? So if you take 260 and you add 80, you get 340, right? So it's essentially an 8/34 as far as like the overall like wave function, the ratio. But the other way you could think about it is, it takes 26 units to set up and 8 units to play out, right? So what is that in terms of like a more simple ratio? And obviously we can round. I'm seeing that as a 3-to-1 ratio, right? So it's taking 8, 9 bars to set up and 4 to play out, or 3 to play out. 9 bars to set up and 3 to play out, essentially, or 10 bars to set up and 3 to play out. So it's slightly north of a 3. It's like a 3.3-to-1 ratio, which is really cool. It's always a good that's your reward as a trader for finding these. I wouldn't say this is a complicated entry model, but it's the setup. The setup logic is nuanced, but your rewards are really great because you've got, not only do you have consistency, but you have efficiency in terms of the actual way that price delivers off of these turtle soups. So yeah, just going through, that's just a nice, even getting in there. So I'll move the risk to reward profile down a little bit. Even getting in like here and just like, the The other thing I was thinking about is, can we view this in terms of a CRT perspective? Is there a way to chop up the time? There might not be. Like you might have to say like, well, if this is a CRT, then this is a 12-hour grouping. In other words, there are 3 4-hour candles. And then we are turtle souping that range. And so it's going to be a candle range trade. And look at the symmetry though. That's really cool. How you have 1, 2, 3 4-hour candles up, a doji, 1, 2, 3 4-hour candles down. So you could almost think, 2 candles of accumulation, 2 candles of manipulation, 2 candles of distribution. Like it, viewing on the higher time frames and through the lens of a CRT, it helps you recognize the symmetry of it. I think of like trading as sort of like playing around with wave functions, and so it definitely fits that perspective as well. Though I don't know, call me old school, but I'd rather be on the 2-hour chart the way that he has it in his review. So yeah, there's not really much more to say. Maybe I'll take one more stab at like a lower time frame. Oh, there we go. So the 15-minute chart to me is the most textbook, because if you have a little bit less, you have a little bit more, let's say, conservative of entry, and it's a way of, you actually have to accept a worse risk to reward profile, and you end up getting in a little bit later. But the idea of large fat up close candle, Romeo order block on the 15-minute time frame, bearish fair value gap right there, and then once you see this constellation, then you are waiting for price to very minorly turtle soup up back into that candle body. And then you could, if you were really playing your cards right, you could have that entry right there, which is only 4 pips lower than what he had posted. And then obviously just be happily riding price down. All right, that's trade number 5 in the Romeo CRT 2023 review series. Thank you so much for listening. And that's